Tesla will make all-time highs. Pretty breaking news, right? I mean, look at price. We're damn near at all-time highs. So really nothing groundbreaking there. But what is it? What are we doing that we're breaking all-time highs? How are we getting there? What happens after? Those are the important things. So I won't waste too much time. I'll get right into it. But before I do, I just want to hit a little quick shout out to all the guys that took advantage of the Discord free 48 hours of social tier membership this week. That was pretty fun. We basically just opened up the gates and let anybody in that was in the free Discord. These are some of the the perks of being a Discord member here, even at the free level of Trade Devils. You get things like that, not to mention free white belt course, free cheat sheets with all of the 13 Elliott Wave patterns, and then of course if you bump up to the social tier, which is less than $2 a day, which we just gave a sneak peek to, you get access to the premium trading rooms, which is where the senseis hang out. I don't personally hang out much in the free room. You don't get quite access that the free members do. You don't get access to the training content, which is honestly the best value, in my opinion, because if you just price it based against the market and the quality of the content, it's extremely high and it's extremely great value for the EDU. But the social is great value too. And again, it's less than $2 a day. If you trade regularly, there's no reason not to take advantage. And I think that a lot of people saw that this week. So I just wanted a quick shout out to that. And this video, what I'm going to do here is I'm going to do a brief overview of the market, of Tesla, and what I think on a macro view. And then I'm going to get down to the nitty gritty, get into the lower degree, but I'm going to do that in a deep dive, which is going to be on the Discord. And anybody, including free members, will have access. It'll be in the deep dive channel. All you got to do is sign up tradedevils.com, and bada bing, bada boom, you're in. So the asset, here we go. Tesla, we're making all-time highs. How are we doing that, Toot? I mean, I think that if anybody, most of you guys watching this YouTube channel have probably been here a long time, and you probably have a good idea of what I'm going to say. We're in a fifth wave advance, right? This is as textbook of a impulse as you might be able to get on this scale. And this is a logarithmic view because we're looking at price action from 2011 till current. So 9 years, give or take, more than 9 years. So yeah, this is the entire price history of what we've got here on the NASDAQ. And price went from $15 all the way up to damn near 1,000 now. So yeah, we need logarithmic to take a look at it at this scale. This stock is, for the market cap that it is a lot like a crypto. So you gotta use the log quite a bit. And essentially the form that we're looking at is one. Let's just, nothing fancy here. 1, 2, 3, 4, 5. Right? Keep it simple, stupid. That's my mantra. And this is a 5-wave advance. Could this be a 3-wave zigzag, B wave? We're going into another zigzag. Yeah, sure. You can put all kinds of different. As an Elliott Wave trader, as an Elliott Wave analyst, as you learn, and I see this a lot from newer traders, newer Elliott Wave analysts, is you try to look at all the different possibilities. If you do that, you're looking into the future. So it's an infinite number of possibilities, right? And you just want to find the one that has a slightly better edge of being the potential reality, as opposed to all of the infinity number of other counts that could be possible. So we try to find, using our the guidelines, the rules, all the tools in the Trade Devils tool belt, to identify what is most likely, and then we stick with that, and that's what you sort of look for. Spending time putting 15 counts on a wave, and personally, in my opinion, is folly. You shouldn't do that. Better time spent on other assets. If this is a terrible chart to trade, I don't need 50 counts on it. 1 or 2, and then I realize, maybe 3. I realize, okay, it's either good to trade or it's not. Move on to the next one. Put 3 counts on that. So when you're putting 50 counts on one chart, you could have it on, multiple other charts and potentially other trades that you're just blind to, if you're not looking at them. So it's all about, investment of time and bang for your buck. So we'll look at what I find to be the most probable count. And it's that what I just showed you, impulse there. So I would think something along the lines of, opening price history here. So, these things are sold before they ever hit the market, et cetera, et cetera. So, don't take into account, I'm not looking at the form of this wave, but something like this. 2, 3, 4, 5, 4, 5, put 3 here, 3, 3, I guess you call that a 5 or something. Sideways of some type here, potentially, and then 5th to come. So let's go ahead and up this bad boy, primary. So what do we have? We've got base trend channel. We do this every damn time, guys. Wave 4 should probably come down to test that. Often does, even in a very bullish asset like this. And look at that. If you don't come and catch here, often you come and catch here on the median. If you break here, probably not a wave 4. Okay, so we got that. Temporary channel probably won't work too great on this one. And they don't always work good. They're beautiful, and I build every count using them. But log, can't draw it. Don't really need to know that it won't draw perfectly. But again, super long-term asset, over 9 years. But I think this is it. And if we go to check our wave relationships, we've got a 2-6-1-8 roughly relationship for the wave 3. It definitely broke out of that base trend that we drew. We'll go ahead and leave that on there. Let's say, I'm going to say to there just for fun. Not worrying too much about the subwave count. Drawing that base trend, finding support, looking at market structure. So we've got some structure here, right? And what should happen at the peak of this impulse, after the peak of this impulse? Well, you should break market structure in that correction. So we will be looking for something, that's a little aggressive, like this, potentially, right? Come down. Wave 4 of the, lesser degree is generally a good idea. Often the terminus of the wave 4, which would bring us down to 176. No matter where this ends, that's a target, right? That's just simple Elliott wave. And so we'll go ahead and leave this on. This supports our argument here. And then we'll go ahead and check our retracement from this wave 2 if we're picking this pivot here. Just using dominant pivots. Didn't even get to the 236. That happens in bullish equities quite a bit. Very shallow retracements. Didn't get it here. So we didn't get an algo play from the, and algos don't typically, you're not expecting them to play the logarithmic. If we go down, let's just go ahead and check arithmetic. Still didn't get it. Would have blown through all the targets anyway. All right, go back to log. And then, so, oops, I wanted to leave that on there for you. What's in here, too? Okay, well, what do you see? Just keep it simple, right? 3, 3. And then it looks more like a 3, 3 to me. So 3, A, B, C, 3, 3, 3. With a truncation. And we were doing some talking in the crypto trading room today with everybody that could see it. It was typically educational and social members, but today it was the free guys as well were in there. Some of them, the ones that took advantage. I'll change this to white. And we talked about how truncations are not that not that prevalent. They're pretty rare. And just like everything else, what's the context? I think that in corrective moves, they're a little bit more prevalent than in motive waves. Motive waves, they happen way less. But you will see like a running variety corrective move a little bit more often. But honestly, it's not very often that you see either. And by very often, I mean, you see it a handful of times, but typically, generally, the way we use the words, the way we look at probability with Elliott Wave, if you read the book, we use words like often, rare, not often, things like that. So, this is more rare, but not, out of the realm of expectation. But when you do have a truncation, you would like the truncated wave to be at least, at least 80% as a guideline of the previous wave. So if we put that here, we're not quite 80, just under the 786, which is good for 80. So we're a little below the guideline. And at the time, you would be probably expecting some more move down. And honestly, once you've broken this median, you're probably expecting you might check this channel. But like the market often does, it leaves you hanging. Especially, in the direction of the trend, it often will leave you hanging, expecting more. And this is in equities, and sometimes in Bitcoin, it'll go quite a bit more than you might expect in the direction of the trend before turning around and going towards the trend. You just got to know your market. I always say that. You have to know the traits of your market. This is an equities market, and that is the trait that you see there. So let me go ahead and we'll leave that up, but take some of the clutter off for you. Okay. So yeah, not quite 80, but just about. So good enough. And then what do we have out of that? What is the expected length of this wave? Well, 1 to 1, 1 would be first, but on this scale, and honestly, according to the book 1 to 1, wave 1 or wave 5 to wave 1 is how you project. But to be honest, the best way, and this is what we've been teaching forever, is that you take 0 through 3 from 4, and you expect 618, which is up here. And of course, we're in logarithmic. And then of course, if it's extended, you would expect for a 1 to 1, which would actually be way up there. And you see these algo targets, but they're actually not really that relevant because of such a shallow retracement. They're probably not in play here. Take those off. So we're an extended fifth wave you can get here. What do you expect in extended fifth waves? Well, you would expect expanding volume, even relative to this 3, which was an extended wave. Although, depending on the length of this, if it gets to here, it's clearly extended relative to all of this. So that could happen, but we're not there because what do we have? We have looks to be a 3-wave move off this low, with this giant deep wave move off of it. Came down, we're on the 2-day Vegas. Imagine it's on the 1-day Vegas as well. And now we're advancing up. Could this be a 4 that comes back down here and then goes back up? Probably not, to be honest with you, because just the relative magnitude of it. Channels don't always work. If you tried to channel that, let us go ahead and channel this little tiny 1 to this giant 4. I hate doing these, but if they fit relatively nicely for channeling, I'm okay with them. What do? We come down and test the top of the base trend channel. Exactly what you would expect, right? Now, if we do our temporary channel, which you use to project the end of the wave 4, we do break out of it, but it goes out and right back in, and it's a significant break, but it's not a major break. So the guideline for this type of channel for a wave 4 would be that if you break it by too much, this is like literally coming from EWI, that you would expect it not to be a wave 4. And Elliott waves are all about form. And I would say that this one, while deep, while quite big, doesn't really break form. It actually, for such a big damn 4, it's actually pretty nice. We'll check this. Let's check the depth of it. Yeah, it even goes to the 618. Curious what this is in arithmetic. We'll clear the chart and we'll check it arithmetic because there might be some algo action in there. We'll look at that in a second before we wrap this one up and go into the deep dive on this move and see what kind of trades we can look at in here and when to expect to turn down. So we do come back, and again, just like we tested this major channel, tested this channel, these base trend channels, if you're not using them, I say this like every week, you need to be using them or you're not practicing Elliott Wave correctly. And of course, we always love the Vegas waves. So beautiful catch. And then again, we have what is a quite extended 3. Let's go ahead and project for the lower degree. Clearly, we're not going to go 1 to 1, this 1 from the end of the 4, because that'd be like super truncated, way less than your 80% that you require it to be. So we're going to go 0, like I said, it's consistent, repetitive application of the theory. 0 through 3 from 4. And 618 is barely creates a new high, little under this one. But we're creating a cluster of confluence here based upon our our analysis techniques. So from an Elliott Wave perspective, just on this outward, big view, this is sort of where you would expect it to pivot. So we start looking at things like divergence. We're clearly diverging, and that's what you expect on a fifth wave. Fifth wave, you expect to see momentum divergence. It's price is still going up. It's sort of like think about momentum. If we're pushing a car and we're on a little track and we're pushing a car and then we're going to let it go. So as we're accelerating that car, pushing it with our hand while our hand is still on it, that's our third wave here. That is really, momentum going up, and then we let it go, and it's still going, but, the momentum is decreasing because we've let it go and we're not actively pushing it. Think of that as the fifth wave advance in a typical Elliott wave structure. Probably a bad. I always like to do these little examples, and I don't know. No one has ever told me they're terrible or they're good, but they're probably terrible. But I hope that makes sense to one of you. In any event, momentum is diverging quite a bit. So that is, a sign that we are in a fifth, meaning we're getting to the top of this giant move. So, while I remain bullish, you got to be aware of what's coming. And I am. Let's go ahead and look at some other points of the technique. Let's look at pitchforks. So let's try just drawing dominant pivots. That's all we're doing. We're going to go ahead and zoom in on these. Draw them correctly. Especially on such a big move, it's important. Even in logarithmic. I mean, log geometry, it just works. It works just, as well as, arithmetic or arithmetic, however you want to say it. Just go ahead and draw that right as well while we're here. Okay. Go ahead and pull that down as well. All right, cool. So zoom out. How's our pitchfork looking? Oh, how about that? So, I say this all the time in training videos. You guys are getting top quality content for the free. The best median lines, I find, have relevance before you ever draw that third pivot. And look at this relevance to this median line. So before we ever use this pivot, this median line has relevance. Again, relevance. And look at it now. Relevance. You see this big green dilly, and we got a little red. And, it's not, you don't have to necessarily touch it, but look at it. As soon as it gets there, it's starting to show resistance. This is a point of resistance. Now, often, if you break a point of resistance, you will kind of dilly up. And this is a type of market that I would not be surprised at all to see a blow off. So if we do get above here, a blow off up that even potentially gets to here. Because again, if we're going to go for an extended fifth wave for this lower degree fifth would be here, projected, 0 through 3 from 4 for 1 to 1. And then for the large degree, 0 through 3 from 4 for 1 to 1. Look at that, right at the pitchfork parallel. So that could happen. $5,000 damn near. Let's see. Oh, no, still in the threes, 34.28. But quite a bit higher than it is now. So that's a possibility. But we project for high probability outcomes. And right now, even though we have this building, and of course, you expect if you're going to get an extended fifth, the wave within the extended fifth wave that you expect to be extended is the fifth wave, right? So that could very well happen. But for now, I think we should stick to high probability. Look for divergence to continue. We have such strong divergence. While we know we're aware of this, we see this. And we know that, this thing's getting, even though it's straight up, it came straight down. It's getting a bit tired, right? At least from a momentum standpoint. Even down here, it's starting to get, less steepening of this wave on the momentum. So we will expect this. We will be ever vigilant of waveform and look when we get in this area. So we'll have to just see. But, from a macro perspective, I'm expecting this range, let's say between 1,110 or 110 and 1,012 dollars as a potential pivot point. And that's kind of, on this scale, looking at a wave of this size, that's pretty finite. And of course, I always like to use, especially in a situation like this, these lower degree projections as a little bit more of an accurate, let's say, to sniper the top potentially. And, I'm not saying I'm going to short the hell out of this top, potentially might. I'm not really a big proponent of fighting the trend. And we are certainly in an uptrend here, especially since March. But yeah, I think from a macro perspective, we can expect this. We are in a fifth wave advance, and this is not the only asset looking like it's getting towards the top with room to go. And when I say towards the top, there's still quite a bit of potential room. That's 25% within the box, and if we extend to this level, double. You're 2x up here. What's this? It's probably like 4x. No. Little less than 3, but still. So when I say getting toppy, you got to look at the perspective. So we still could potentially have quite a bit of room up, but that's what we got for the macro look. Join the free Discord, and you can see a deep dive on the tight look. All right, boys, toot out.